What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is September 3rd of 2019. Well, folks, I hope you all are having a fantastic day wherever you are. And in today's video, we've got a wide range of topics to discuss, but we've really got a big piece of news coming in relation to what could be one of the first variations of a Bitcoin ETF launching very soon. Now, again, I want to make it very clear, guys, this is not the full-scale ETF that everyone's been looking for. However, I believe that it's a bigger deal than many people are making it out to be, and it has to do with how this could reach to a wide range of portfolios that originally was the reason an ETF would be so bullish. So we're going to be talking about that and much more as we go throughout the video, from price predictions of Arthur Hayes to taking a look at traditional markets and keeping an update on how our sponsor Traval is doing. But let's go ahead and take a look across the board here for the market, guys. As we can see, Bitcoin is up around 6% over the last 24 hours, and the broader market right now is more to the green. However, we do have a lot of players in a no trend scenario from 0 to 1 to 2, or 0 to 1 or 2% to the upside or downside. However, right now we've got a few plays that are just barely outpacing Bitcoin, such as some of our plays like Chainlink and Energy. But taking a look at the broader market here again, starting to curve back up here as we've been having Bitcoin slowly but surely picking up over the last week in the sense of price momentum after the correction down to the low 9,000 range. And again, Bitcoin has been making most of these gains, guys. As we take a look at market dominance, we have pierced above to new relative highs in Bitcoin dominance over the last year, upwards towards 70.2%. So again, this is all playing into mind the idea that I think right now there's a serious amount of FOMO into Bitcoin. No doubt there may be a correlation where altcoins come back and come to correlate back to Bitcoin's price, but I think there's a big FOMO coming in due to the institutional interest that could come in over the next few months to Bitcoin. And I think this news is only going to serve as more fuel to the fire for this supposed Bitcoin ETF that is going to be launched in a matter of really a very short period of time, really only a few weeks. So we'll go ahead and take a look at that in just a moment. But taking a look at price real quick, and just until I have to get my premium features back onto my my CryptoWatch account, guys, just to let you know. But until that, I decided I wanted to change the theme here. And for those of you out in California, this is UCLA colors. I didn't go to UCLA, but it was one of my favorite color combinations for college. Anyways, this is basically green candles anytime we see a blue candle, and then anytime we have a downward candle, if you can't already tell, would be a red candle. I thought it'd just make it easier for you guys to see. I know some of you guys have been having a few issues on mobile, and I'll also close these in so the chart gets a little bit bigger, because that's really all we need to see. Alrighty, so if we take a look here, again, we're starting to re-enter back into the wedge that we had here. And again, as this line continues to drag down this way, it becomes very easy for us to potentially have a breakout here on prices. We get past this descending line of resistance that played a role in the wedge. And if we get above, if we really kind of continue the line here, if we get above anywhere around 11,000 or the upper 10,000 range, I think we're set to go, guys. And I think that could really come in as people start to realize how big this news could be. Now, this is the news that came out recently. It's the Vanek Solid X Etf. This isn't the one you've heard about before. This is a separate one where they're going to be using an SEC exemption to bypass the traditional regulatory framework in order to expedite getting an ETF to market. Okay. Now, there's a few precautions we need to keep in mind with this. What they're using is something known as Rule 144A. Okay. Now, if you can see from the summary, there's not much details on it right now. This is what's been going on. It's been making the rounds for a variety of media outlets out there, but I want to make sure there's no misinformation on this, because this is something we've actually talked about for a little while on the channel before. We've talked, I think, almost a year back about the potential ways where you can expedite ETFs that the SEC has instilled for traditional and financial companies in order to build financial products to expedite the system. So let's go ahead and understand this. So the first thing is that this is not directly available to retail investors. Now, don't let that shy you away. It means that retail investors, for example, who may have a Robinhood account or an E-Trade account, a standard brokerage platform, will probably not be able to go out and directly buy these products unless they reach institutional classification. That's the 1% of individuals who are accredited investors. Now, and again, even at that as well, it might not be available to all accredited investors. The idea here is that it's available to select investors. Now, the interesting thing here is this is where the question comes in. Who are these select investors? Is this going to be as select as it is, for example, with when we had Fidelity, when they were just testing the waters of their products, or is it going to be to broader accredited investors and money managers? Because if it is to that broader audience of that 1% of money managers, this actually might be bigger news than we think. Because according to Rule 144A, at least on Investopedia, which is one of a really, I know it's very simple, but it's a very good source, again, to get an understanding of these kind of regulatory topics. They mentioned here in the video of Rule 144A that there is a possibility for people who are pension fund managers to be able to buy certain types of ETFs or regulated products that are under the rule of 144A. So what does this mean? Well, if you guys remember a while back, I talked about the biggest reason for a Bitcoin ETF being bullish. It's not just Wall Street speculators wanting to speculate on the price. A lot of them can go out and probably do that, especially if they're managers of hedge funds. There's already hedge funds with plenty of exposure to crypto. What's going to really drive the next wave, maybe not this wave, but one of the major waves in cryptocurrencies, is an ETF coming to market, and that ETF being brought into a form of exposure for pension funds, people's retirement portfolios, getting 1 or 2% exposure to cryptocurrencies and their retirement portfolio, especially as we see a mixture of currency crises, a mixture of equity markets starting to falter, push sideways or go downward and enter recession territory, as the housing market looks like it's finally starting to stagnate or slow in growth, in some places dropping prices 10 to 20%. That is going to be the perfect hedging asset, especially also not to mention in a world where there is $16.7 trillion in negative yielding bonds. It's time to consider that if there is an entryway here, this could be huge for cryptocurrencies. Really, really big. Not only, again, for institutions to get exposure to this new asset class, but for retail investors, right? So this is really, really interesting stuff. And I've been curious for a while why this hasn't been pushed. I mean, again, I mentioned this like a year back. This rule has been around for a while, and there had been rumors that people would go through and use this exemption status. But anyways, it's very exciting to see. I want to go ahead and read through some of the details here. It's really not a large article, so I thought we might as well dive through it, seeing as it's the main topic for today. While the U.S. Securities and Exchange Commission, or the SEC, has so far blocked a number of proposed Bitcoin ETFs, two firms aim to launch a more limited option this week. According to a report by the Wall Street Journal on Tuesday, VanEck Securities and SolidX Management, which have previously had a decision on their proposed Bitcoin ETF to be postponed by the SEC, are taking an unusual route to bypass the regulatory hurdles. They will use an SEC exemption that will allow shares in the VanEck SolidX Bitcoin Trust to be offered to institutions such as hedge funds and banks, but not to retail investors. The shares are reportedly planned to be sold from Thursday under the SEC's Rule 144A, which allows privately placed securities to be traded among qualified institutional buyers with shorter holding periods and without the requirement to register with the SEC. To date, the SEC has not approved any crypto ETF, although SEC Commissioner Robert Jackson is one of the recent, I think he's one of the more recent SEC commissioners, said that in early 2019 that he believes an ETF proposal will eventually meet the SEC standards. On August 12th, the SEC delayed decisions on Bitcoin ETF proposals by Bitwise Asset Management, VanEck Solid X VanEck Solid X. God, these names are such tongue twisters after reading like a set of paragraphs, and Wilshire Phoenix, all of which hope to become the first to offer a crypto ETF in the U.S. Those decisions are now scheduled for later this month and in October. So I think this is going to be the entry that a lot of people, especially the SEC, want to see. You know, the SEC does have a huge responsibility here, guys. I know some people say the SEC shouldn't be determining whether or not you should have exposure to this, things of that sort. Guys, I 100% agree and understand to some extent. I'm not really arguing for that. What I'm saying here is that the rules are what they are. And the SEC does hold a decent responsibility here in making sure that an ETF coming to market, especially if we're going to have custody of these funds in one single place, is launched properly, that it can't be manipulated on spot market. We see the kind of price fluctuations in crypto markets that happen. Can the SEC be held responsible for that if they launch a big product that goes into the portfolios of Americans and institutional traders? You bet they can. They can't. So that's the thing. That's why they're very hesitant to launch something like this. And I think having something like this come to market, that might not only be able to give exposure to some retail investors and their pension funds, but also to accredited investors might be that first step we need. Again, I would much rather it be for everyone, but we have to take what we can get. And this is actually pretty exciting news for those of you out there who have been looking forward to institutions gaining exposure. So I don't know if we've really seen it fully reflected in price. I don't know if a lot of people, and the volume surely hasn't come into the market. Maybe I'm missing something. And if I am, leave a comment down below, guys, whether you think this is good news or bad news, or really not news at all. I'd like to know what you guys think down below in the comments. But anyways, let's go ahead and take a look here at the next set of news. The man himself, Arthur Hayes, probably one of the few things I like about BitMEX, because as much as I'm not a fan of BitMEX as an exchange, I have to be honest, whether you like him or not, Arthur Hayes is pretty direct and honest, and he's been pretty accurate on a lot of price predictions. But anyways, Arthur is basically claiming that we're going to be two-stepping to 20K. So let's go ahead and, again, cut out all the noise of the article. This is the actual tweet that he put out. And as usual, he's traveling across the world. He doesn't tweet very often, but when he does, he usually puts out price predictions or makes some kind of hint to the market. He said, "Did y'all miss me? I'm back in from the deepest, darkest Peru, ready to cash checks. For those of you in Singapore next week for Invest Asia, keep Wednesday night free. We will be two-stepping straight to 20K." So he believes that in this case, we're going to be in a very short period of time, moving towards 20K. As many people have kind of predicted, in the not near future, we're going to be revisiting 20,000. As we've seen in the past, this was the previous high for Bitcoin. And this is, very common in previous cycles for Bitcoin. We tend to find that the market is going to revisit its highs, then enter into a corrective period, very short correction, not a bear market, but a correction. And then we revisit back to the highs and enter into the next cycle. That's what happened last time when we revisited back to 1,100, went down to around $900 or $800, and then we revisited back up and then continued higher. So this is when we can expect altcoins to hopefully shift in the market. I don't know if Arthur would agree with that, because he's I wouldn't say he's a Bitcoin maximalist, but he's been quite critical of Ethereum and a lot of other cryptocurrencies. But that's what we've seen previously in history in the sense of risk taking. So again, I'd love to know what you all think about Arthur's prediction, whether or not you do believe that we're on our way to 20K here in a relatively short period of time. I think honestly, again, we've seen that from this price range onward to 20K, the price action was very quick. Then again, it was in a bull market. So I think we're going to have a little bit of a slower rally here, I think, going into 2020, where we could see by the end of this year or early 2020 that we revisit the highs. I think that's what happened in the last cycle, if I remember correctly, but not 100% sure. All right, so real quickly to go through a quick sponsored mention of some updates for Traval, one of the companies I'm an ambassador for. There's some pretty big news going on for Traval. So they've recently decided that they're going to be migrating over from the NEO blockchain over to Binance Chain. And this is going to allow them to not only migrate their tokens over to Binance Chain, which can probably provide a lot more scalability in this case from the current point compared to Ethereum. But along with that, this is going to give them a chance to list on the Binance DEX. So they've already applied for a listing on the Binance DEX, which is good news for them, bring possibly more liquidity to the AVA token. But this also brings a lot of benefits for Binance's community. For those who hold BNB, BNB will now be a choice of payment you can utilize on Traval.com to place your next booking. So again, bringing more utility for the Traval token. And again, they're going to be going through a new buyback and burn program where they're going to be every quarter buying up AVA tokens until they get down to the overall total supply on the market, cutting out 35% here and reducing it down here to only 40 million tokens on the open market. So again, a lot of good supply and demand elements here. Again, reducing the token supply, not to mention as well, you've got real utility in this case in the sense of using it on the website where you can actually get discounts on your bookings. And the company has been seeing really solid growth, guys. 1,000 rooms booked. And this last monthly report, 25% month over month. really exciting to see here. So if you guys would like to learn a little bit more about this, if you want to see some of the data visualized, again, in the sense of the bookings that they have month over month, and then also a variety of other data sources such as their new hotels that they have in their database for you to book. Again, it's really exciting. There's exciting times here for Traval. A lot of things going on. You can check the links down below in the description to find out some more info. But again, very excited for the guys over at Traval. They've been a very pro cryptocurrency company. You can see which cryptos are used for payment here. Again, very nice diverse portfolio of other cryptocurrencies that they accept. But going on to traditional markets, we can see here that futures are looking to open up around a little bit less than 1% to the downside, around 7.70% here. And if we take a look at the weekly, again, this looks like we might curve over here. I guess it's more clear on the daily here. We've had 3 days here in the futures market where we've been slowly but surely printing lower prices, and it just seems like we're continuously hit down by this resistance near 2,950 to 2,900. So I think that we are going to see some downward pressure here. If we set anywhere below these lows here before the FOMC meeting and the Fed doesn't play their cards right, expect markets to move pretty dramatic to the downside. Now, the next FOMC meeting is going to be 2 weeks away, right? We've got a meeting coming up in mid-September, so that's what you want to watch for. But again, it's very interesting. I talked about in the newsletter, which we just shipped out, the question of whether or not the Fed is going to raise rates or cut. Sorry, they're not going to raise rates, but whether or not they have to cut rates. That's the kind of interesting question. A lot of people are expecting that the Fed will cut rates. They're expecting that, and the reason being is that they've got room to do it. We've been rising rates at a very steady rate, whereas other central banks, like the Eurozone with the European Central Bank, has remained flat. We have a lot of areas, for example, the negative interest rates like Japan and the negative yielding bond market. But there's a very interesting question. If they cut rates, what is that going to propagate? It's going to propagate other central banks to do the same, to cut rates lower, and to, again, fuel the inevitable negative yielding debt crisis that's already big. It's already almost near $17 trillion. So if the Fed doesn't keep rates the same and force central banks to either keep their rates at the same level or rise rates to compensate and to compete with the U.S. Central Bank, the Federal Reserve, then we might continue to fuel this debt crisis, this negative yielding debt crisis, which is going to have a detrimental effect on the global economy, hitting the United States, even though we don't have negative yielding bonds, right? I think what the Fed is going to do here is really set the tone. And either way, whether they cut rates or not, we're still going to be in a prominent location compared to other competitors in other countries where people are going to flood dollars and currencies. They're going to flood currency into the dollar, into U.S. Treasuries and U.S. equities. And that's why I think you could see U.S. equities hold out a little bit longer. That's why I'm not Dr. Doomsday on it. But I still believe we are entering towards a period where there's not much reward left in equities. I just don't see it unless we have QE, infinity, and drop rates back down to zero. In that case, keep the party going. It'll be a fun time. And then eventually it'll be disastrous. But, they can be fun in the short term. Anyways, just being real, guys, trying to provide a very non-biased view here. Again, as much as I am pointing towards recession territory quite soon, might not come as soon as we think. And there might be a little bit more of an expansion to go. That's what the Fed's on to. That's what every central bank wants. They want to continue the expansion. What do you guys think? I want to know what you all think down below in the comments. Get a discussion going as always. And if you guys, again, like the video, please drop a like. Consider subscribing if you haven't. Come join the Data Dash family. And along with that as well, if you guys would like to support the channel, there's a lot of links down below in the description where you can help out. And one of the best ways to do it probably is downloading the Brave browser, cutting out all the ads and trackers, and hopefully tipping here on the channel. But anyways, that's it for the video, everyone. Thank you all so much for watching, and I'll see you all in the next video. Stay tuned.